What is up, boys and girls? Empire Steve back with you yet again. I know it's been a while, and I'm sorry about that. I did go live a couple times on YouTube. Those did not go. That did not go very good. And let's be honest, my mind, to be real with you all, my mind is not very clear lately. I know my voice sounds a little scratchy. I'm not sure why, but it might have something to do with it's cold. So, and my sinuses have been acting up. Anyways, today was a great day. Looking back at how I've traded the past couple weeks, I wish I would have done things differently like I did today. This is an old strategy I used to use. I'm going to be showing you all today. Well, I went back to it today, and it worked in the past. This is what I used when I was trading options, and I did really well with it. I'm not sure why. I think learning that whole ICT thing has deviated my thinking, how I look at the market. So I'm going to try and step away from ICT for just a short bit. That's exactly what I did today, and it worked out great. So what I'm going to do is I'm going to remove all these indicators first, actually, and you'll see it's hard to see. I made $357. I still am going to pair in fair value gaps, but that's not only ICT, right? So that's smart money concepts. That's just not an ICT. It's not a pure ICT thing. So, but I made 357 off of just one trade, 3 micros, and it worked out perfectly. So I'm going to show you all the strategy. So I'm going to remove all of these indicators, and we are going to add them all together, change them up. So here you go. First thing we're going to add, and you all know that I love the EMAs, and I've been using them forever, but we're going to do 2 of them like that. And then we're going to look for moving average simple. And then I should do that as well. So we got those 3 right now. We are going to add pivots, and that's pivot point standard. We're going to click there, and we're going to do 2 more. We're going to do volume. You don't necessarily need the volume, but it helps that way, and I'll show you why actually. And we're going to go with relative strength index. We're going to click there like that. All right, now we're going to clean them all up. First thing we're going to clean up is the EMAs. You all know that the green goes to the 9 EMA, and we're going to thicken it up so you can see it. See, 9. All right, then you're going to hit OK. We're going to go to this next one. We're going to do red, thicken it up, and change that to 21, and then hit OK. We're going to go to this simple moving average like that, and we're going to go 50. We're going to go to style, and it's blue, but we're going to thicken it up so we can see it. All right. Now we're going to go to the pivots. So the style, you don't mess with anything. This, you don't need 15. I just do 3. And you can change these colors if you want. It's totally up to you. You would just click in here and change the color. I'm not going to do it. I'm going to leave it just as it is. Yeah, I don't want to go through all that and do that. That's boring. And we're going to hit OK. Then volume, you don't touch that. All right. And then we're going to go to the RSI. And we are going to clean this up, and we're going to leave all of this the same. We're not touching this. We're just going to the style. We're going to get rid of that. Don't need it. 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 We need the RSI upper middle. We don't need. Oh, I kind of want that too. That makes it look a little. Do we need that? You don't. That's up to you. Actually, we're going to use it. I'm going to change the color. We don't need any of this stuff. All right, so we're going to change this to a different color like that. And we're going to change these to, let's go with the blue like that. And whoops, we're going to make it a line. And we're going to do the same blue color. I believe that's the same blue color, and we're going to do a line. We're going to make this 80. We're going to make this 20. And in this one, we're going to do white. We're going to thicken it up. So then we're going to go back up here to this RSI. We're going to change this color to something that you can see. You can do yellow. We're going to thicken it up. You can do, let's look. Ooh, that looks juicy. So there you go. You can see it. It's all there. And now here comes the strategy. So let me see. Thanks. Sorry, I'm just responding to somebody real quick. All right. I know I shouldn't do that while I'm recording a video, but I don't care. You guys know, if you've ever watched me, you know how busy I am with work and stuff. So this strategy works best between, and I'm going to draw it on the screen right here. Bink between. I will see, say, 8:45 a.m. EST. Best time to use this strategy. 8:45 a.m. EST to 11:30 a.m. EST. If you're holding trades, that's one thing, but you don't really want to be looking for trades the whole time. Through lunch can get a little funky, but sometimes it works out, sometimes it doesn't. So let's make it a little more simple. AM to 3, I would say 3:30 p.m. EST. So all those times. So lunchtime can be a little funky, and we're going to do some back testing so you'll see exactly what I'm talking about. So today, though, today's trade, nothing gets cleaner. It just didn't get cleaner. So I showed everybody exactly why I took the trade. I was live on Twitch, okay, and I showed everyone exactly why I took the trade. So you can see now. Here's the deal: when this is the 50 moving average, when we are below it on any time frame, doesn't matter. When we are below it, we are bearish, right? When we are below it, we are bearish, right? Okay, so I use this on the 3-minute. So this is what I did when I was trading options. Worked out good. Why did I ever change it? I don't know. I'm a little sad, but it's all good. ICT has taught me to see the market differently. Now I have to unteach myself from using that whenever I'm not thinking about it. So here it is. When you have this, the green is the 9 EMA, the red is the 21. So that's basically the length of days, right? So this is 9 days, this is 21, this is 50 days. That's basically how you can look at it. But when the red line is above the green line, we are bearish. When we are below the 50, we are bearish. So all those things line up, right? All those things line up, and here's 9:30. You can see we have one green candle at 9:30. I got in shorts at 9:33, and the reason why I did is because here you go. We are definitely bearish, right? The momentum is bearish. You should only be thinking about shorts. You should not be thinking about longs. But we come boom, boom, and look at the RSI. This is basically, these are your confirmations. Are we bearish? Yes. How's RSI? Are we bearish? Yes. Most people, how they use RSIs, they look to go short when we get above the 70, really. Then they're thinking, oh, we're overbought, so I'm going to go short. But just because we're overbought doesn't mean we can't go more overbought. And just because we're oversold does not mean we can't go more oversold, because I guarantee you 90% of the time we will. You're looking for us to be bearish, and we are. So we can go from a bullish, and this candle is your real indication. The sellers are in control right here, and they remain in control. So we are bearish, and you're looking for us to come back and retest this 50 or around this 50 area. And we do that, and that is why at 9:33 I went short. And you can do two things. you can put your stop at this 50 moving average, or you can go to the prior high. So you're looking to go short, and I'm gonna just say, let's use the 50 as your stop. Always use a stop. You will be punished if you do not use a stop. It will get you. And while price is moving down, you want to trail your stop. So you can trail your stop with this 50, which is a little bit risky, but look, if you would have done it, you could have held it all day. If you're on an Apex account, it can punish you because we're going to go up and we're going to go down. So I'm going to be looking to be taking profit. Doesn't matter. Today, I got 50 points. I could have got 100, but that doesn't matter. You know, the market's not going anywhere. You will get more trades tomorrow. You will get them on Monday. You will get them on Tuesday, Wednesday, Thursday, and rinse and repeat as long as it's not a holiday, right? So the market's not going anywhere. Don't think you have to trade all day. Don't think you have to trade every day. If there's days that you think that you don't do well on, don't trade those days, or trade smaller on those days. Just learn and read the market. That's all you can really do. So I held it until we got to this pivot. I was looking for this pivot as was my target 1. This pivot was my target 2. And what do? We go to both pivots. Where was your second reentry? Your second reentry would have been right here. So this, you could have, I just wouldn't do it. So if you missed this train right here, you really should have waited until we got back up, tested this 50, and got back in. So you go short right when we test this, which is right here. And putting your stop up here is a little risky. Look at how many points it is. So you got in at 996. That's a 24-point stop. Some people would do it. Some people have the amount of risk to do that, but you may not. So you have to use your risk accordingly. So this is your second short entry, and you're looking to take out this low, which would technically be 600 down to 918. That would have been 80 points. Good God. But look it goes all the way down to 880, all the way to the second pivot. So these pivots are technically an area where we could test. So it's an area of interest. So you're using the EMAs and the moving average to figure out exactly what the market behavior is. Are we bullish? Are we bearish? Are we mixed? Whatever it may be. So that was your second entry. And you definitely should just be done for the day. Trail your stop. When I'm up about 10 to 15 points, I start trailing my stop. It's just something I've always done. It's just something I'm just going to continue to do. I'll probably do it forever until I unfigure that out. So let's go do some back testing. Let's go find a day where we were bullish. So here is Wednesday. So the further back we go, I'm not going to have pivots unless I change it. So let's go change it now so I can go back multiple days. So we'll go 30 days. It's going to really screw up the chart though. So here is Monday, and it's 8:30. We got some news. We're still above this 50. It gets a little mixed right here. It's 9:15. We're testing this. This is the 50 moving average I'm referring to. This is the 50. So you're looking for longs. And what do? We come back up and we test it. Here's 927. This would have been a great entry, thinking that the market is going to go up. There's no sign that it's not to. So you could just it's simple. You can put your go long here, put your stop down here. You have these lows here. You can see that there's some support here, right? So there's a lot of support in this area. So go long, put your stop down here. I actually went long, but I kept trading. I should not have done that. Today I did it exactly the way you're supposed to. I got my one good trade, and I just did some tape reading after that. I did not trade anymore. We test it, and then here you go. You would have taken your 10 to 15 points, or if you rode this all the way up, by all means. I hope some of you did. You could use a strategy simple as go long, trail your stop with either the 50, the 21, or the 9. The 9 would have been your best bet, and typically will be your best bet because you can always get back in if you want to. So then you start seeing the market shift. So you have these EMAs crossing to bearish. When the green is on the bottom, the market is bearish because the red is on top. And you have this 50. We are below it. All right, we come down, 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 down. Here's 11 o'clock coming up, and we test this 50. So we are still bearish. We don't pop up above here. And this would have been your re-entry for the shorts. And voila, come down and maybe potentially test this pivot, but you don't even need that much. It still moves almost 100 points for you. It moves 100 points. NASDAQ will give you so many 50 to 100 point plays. It happens multiple times, sometimes multiple times per day. So this would have been your re-entry. Here it's 10:57. And you just could have been done for the day. You ride this down until so if you got in here and once price starts moving in your direction, you're trailing your stop with this 9, you'd have gotten out right here. Right here, you would have gotten out. Boom. So from in this area, from 120s all the way down to 55, 0.55. So that would have been 60, 70 points right there. And that is a great day. So let's go to Monday. I don't want to trade Mondays. Mondays are here's Tuesday. You do get something similar on Tuesday. So market shifts from bearish to back to bullish. It's bouncing around this pivot. You can see price, the RSI is moving up, moving up, moving up. So here at 10 o'clock, here's 10:30. There was news at 10:30. I wouldn't have really traded. You could have traded this since we stayed around this RSI, but I don't like that we went below it. So here's 9:30. You could have taken that, but this would have been the banger. You can see that we are just kind of consolidating and then we break out. This is where you need patience, and voila. And then what happens when we start selling? So it's 11 o'clock, come up, and then we are looking bearish. It goes below. It doesn't. I wouldn't have taken that. So I would have been done right in here. I lost money on Tuesday. That's not very clear. You can see Monday is just gross. This price action is nasty, but there's still plays to be made. Like if you're trading this chop, you would have gotten chopped out. This was definitely choppy. This strategy is not going to work 100% of the time. So you always want to have. This is why it's important to use stops. This is why it's important to only take a couple trades a day. I just took one today. It's so important. The more you trade, the more you potentially could go red, or you could potentially give back. So here you go. We do finally have a breakout. So we break out, we break above this, and we come down. We're testing this 50 EMA, and we are get close to this 50 on the RSI, a little bit below it. That's okay. You could have went long once we popped right back above here, because there's going to be likely a continuation to take this out. So say you did get in, right? You would have gone in around 615, 620 until we take out this 50. That's 30 points. Just imagine 30 points, right? Even just one contract or just a few micros of some type. So let's go back to the prior week. And here you go. We are bullish, 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 bullish. And we are just testing. Look how many times we come back down and test this 50 RSI. Look how many times. And then again right here, it's 909. And then boom, the market opens. You go long. You put your stop down here at these lows. You go long, and look at that nasty play you could have gotten. And this is why it's so important to trail your stops. This, I can't stress it to you all enough. You must always use a stop. You can use a bracket order. You can do a take profit and a stop. There's nothing wrong with that. But I'm not kidding you. You better use a stop. You will be punished. This will punish you. If you just go long thinking we're going to go all the way up to this next pivot, you're wrong. We won't always do that. And we go boom, right back down. No good. No good. So use your stops. And then we're just kind of like consolidating around this. And I personally wouldn't have taken it. Here's 2 o'clock. We do break below it. But it's just not clear. If you're using just solely the EMA strategy, you can do this all day, right? So you can do it all day. It's up to you. But if you're using the EMA strategy alone, look at how many times you could have got screwed over. So let's go to another day. So here is last Tuesday. This is the 21st. You can see that overnight we have been selling. And here's 7:30 and the selling continues. And then here we are getting close to the market opening. So we're coming down. We're coming back up to test this 50. And this is where you will look to be going short. Like look to be going short. Put your stop above this moving average if you want, this 50. And then you're looking to sell when we get close to this pivot, or you can see we start turning around, right? So if you shorted up here, like close to this, you can see if you took shorts in here and you're looking for 10 to 15 points, you would have gotten that all day. Just boom right here. If say you even got in at 15, right here is 7.7. Like that is, that's 40 points right there. 40 points. Like that's perfect. I made 350 off 3 micros just trading, just getting 50 points. So that's all you need each day. You don't, if you want to hold it, you can, by all means, hold it. If you have the cojones to do that, do it. And then here is Monday. I told you Mondays are funky. Look how funky this Monday is. But look, we're testing this pivot. We shift to bullish. We pop right, RSI just squeezes right here. Boom, 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 boom. Coming down, 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 down. We're testing this 50 on the RSI, and then we go right back up and take out this high out. This high out, you got a shift. We're above the 50. You have a shift. I would have went long right in here, and held for this pivot or this prior high, and you get that. So 63 all the way up to this is 5,963 all the way up to 20s, right? And this would have been your retest. This is 1 o'clock. You could have gotten into it again. Look at this volume coming in right here. Look at all that volume coming in. We're still above this 50. We come touch this 50 on the RSI. Look at what you got, 18 up to 77. Gosh, another 50 points. So I want you all to go back test this. See what you can find. I laid out all of the indicators earlier in the video. If you got to go back and do that, rewind, tear it up, test it, use it. Let me know what you think and try it out tomorrow. See what happens. I hope you learned something from this video, and if not, I don't know what to tell you, right? So I'm sure you've seen something similar before. Don't overthink it. Like I have done the past couple of weeks. I've overthought it, but I've got a lot going on. So when you've got a lot going on in your mind, maybe you shouldn't be trading anyway. I did deplete all of my accounts, but I did put more money back into it. I felt a little bit better after just going back and watching some of my old videos helped me. I've made videos like this before, so do that. Give it a shot. Don't overtrade. Don't revenge trade. Get your 1 to 2 trades and get the heck out of town. And then maybe come back and look at the market. Trade micros. That's what I did today. It was great trading micros today. But anyways, I hope you all have a great rest of your day. And if I don't talk to you tomorrow, I will be on Twitch tomorrow morning. You will find me there. So my Twitch link is down below. But if you don't see me tomorrow, have a great weekend. Take care and talk to you soon. Toodles. Bye now.